Big news for homeowners, the US government just passed their 2020 stimulus bill, and inside that bill is a section that may allow you to not make a mortgage payment for up to half a year. This process is known as forbearance, and it's for homeowners who are experiencing temporary financial difficulties. And specifically, the bill reads, during the covered period, a borrower with a federally backed mortgage loan experiencing financial hardship may request forbearance on the federally backed mortgage loans regardless of delinquency status. So as of right now, this bill only applies to federally backed loans, but luckily that's the majority of the loans out there. So if you have an FHA, a VA, a USDA, a Fannie Mae, or Freddie Mac backed loan, this applies to you. And also many large banks like Bank of America have already announced similar programs for their borrowers who are not covered underneath this bill. And we're expecting to see more large banks come out with similar programs as well. So with this bill, it's applicable to anybody who owns a 1 to 4 unit home, and they can claim an initial period of forbearance for 60 days, and then they can renew it up to 4 times for 30 days each, for a total of 180 days. The bill is also applicable to homeowners who are renting out their properties as long as they purchase the property with a federally backed loan. And this bill also specifies that landlords are not allowed to evict their tenants for a 120-day period or charge them any penalties or late fees for failure to pay rent. So if you do own a rental property and your tenants are not paying you rent, claiming forbearance on that property is probably the best course of action for you. Now, forbearance is not simply skipping your mortgage payments. Instead, what they do is they tack these payments on to the end of your payment schedule. Now, in America, the most common loan is a 30-year fixed rate loan. So if you claim 6 months of forbearance, that loan is instead going to take you 30 years and 6 months to completely pay off. However, the average American only lives in a home for about 11 years. So if that's the case for you, you're never actually going to make those 6 months of payments that got tacked on to the end of your loan. And this bill also specifies that your lender is not allowed to charge you any fees, penalties, or additional interest as a result of you missing payments or claiming forbearance. They also have to claim you as current to the credit agencies, so this will not impact your credit score or your credit history. And in fact, they should not show up on your credit report at all. Now, there is something pretty important that this bill does not specify. You see, your mortgage payment is made up of 4 separate payments. That's your principal, interest, taxes, and insurance. We call this PITI. So part of your monthly payment goes towards paying down the principal of your loan. Part of it goes towards the interest that your bank is charging you on that loan. Part of it's going to your property insurance, and the other part is going to an escrow account so that your bank can pay your property insurances at the end of the year. You see, your lender wants to make sure that the state does not repossess your property for you failing to pay your property taxes, which is why they pay them for you. And they also want to make sure that you keep your insurance on your home, which is why they pay your insurance for you as well. So this bill allows you to claim forbearance on your principal and interest, but it does not specify what happens to your monthly insurance payment or your monthly tax payment that goes into an escrow account. Now, what we may see is that individual states may also allow you to claim forbearance on your property taxes for that time period as well. If they don't, then another option is that your lender may just charge you a lump sum at the end of the year for your property taxes, or you may just want to continue making property taxes payments to your lender to stick in an escrow account. And as far as your property insurance, there's really no way around that. You're most likely still going to have to pay your property insurance every single month. So how do you actually go about claiming forbearance and claiming the benefits under this new bill? Well, in the bill, it simply states, by submitting a request to the borrower's servicer and affirming that the borrower is experiencing a financial hardship. So all you need to do is reach out to your mortgage lender and say that you want to claim forbearance due to a financial hardship. And according to this bill, you do not have to document your financial hardship, but simply affirm your financial hardship or simply state that you're experiencing a financial hardship. Hey, if you want to learn the 3 ways that I think the real estate market is going to be severely impacted from our current situation in 2020, click right here to check out my video on that. And if you want to learn more financial and real estate strategies, subscribe and hit the little bell icon to get notified every time I upload a new video. Thanks so much for watching, and I'll see you over in the next video.